Hey traders, happy Tuesday. Hope you had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. We'll kick off here with the diamonds. The Dow ETF lost about 0.5%, but it was worse than that today. We even dipped below the 10-11 low, which I said to keep an eye on, but I said if it closes below there, and we did not. We ended up closing back above the purple line, which is the 200-day institutional moving average, but we're still below the 5-day. So the bears still get the edge here on the daily chart. This still does count as a bear flag. But the good thing is for the bulls, the 200-day was held. Now the SPY was down about 0.5% as well. However, it did close below the 200-day SMA. I do have a bullish position in the SPY. Now, we did not close below the 10-11 low. If I change this into the SPX, we also did not close below low on the SPX from the 11th. So we're hanging in there, but there has been a dip below on the SPX. There's support at 2,700, and the main support's down around the 2,600 area, give or take about 10, 20 points or so. If we go to the Qs held the 200-day moving average in purple as well, but they're still below the 5-day. This also is a bear flag. Everything still points to keeping an eye on the closing low from October 11th. Then the IWM, it put in basically a high wave doji type action. It did get down into the support area in the mid to upper 140s, but it too is still bearish. So the VIX, $VIX, came off its highs. It finished up only 5.45%. If it had finished near the highs of the day, that probably would have been a bad omen, would have been setting up for probably another plunge higher or a spike higher, which will lead to most likely a plunge in equities. Again, caution remains warranted. This is a huge earnings week. We talked about Google and Amazon coming up tomorrow, I think Microsoft as well. Well, Caterpillar and 3M, the two we're going to look at next, they had earnings this morning before the market opened. Cat finished off the lows, basically a high wave doji, showing a lot of indecision, but still finished down 7.56% or almost $10. I have to go back 2 years on Cat to try to find some support, and really a little bit at 110 and then a gap fill about 105. That's still some pretty decent downside targets right now. 3M finished down 4.38%. However, it held the 190 area. If 190 falls, a little bit of support around 183, 184, but then it's all the way down into the 170s. It sort of looks like, if the market's going to roll over here, some of these stocks still have that distance to the next support level. Things are still lining up, if you will. Now, UTX had earnings, and they finished up on the day. Now, I bring UTX in because it was just in the 140s. Now it's down around mid-120s. Finished the day up 2.86% when the market was red. If you look real close, bullish engulfing on above average volume. Now, it wasn't an epic spike in volume, but we did close near the highs of the day. If I wanted to be bullish on United Technologies, I literally could think about using the 5-day EMA in blue or go to an 8-day EMA and see if we can catch a little bit of a run here. Because the target's about 140. $10 is still pretty decent, about 6% move. Texas Instruments reported results after the bell. I'm going to pop this open and show you. As I record this video, it's about 5:17 p.m. Eastern on the 23rd. It closed at 100.25. We're now around $95. So 95 is right where the intraday low was. So it's testing that today. If 95 falls, and not just by a couple pennies, but something like 50 cents or $1, something more substantial, not just pennies. Support 80, low 80s. That could be a huge potential drop here on TXN. So heads up on that one. Netflix, they had some news today. They had to raise the yield on their $2 billion junk bond offering. Once again, the stock held the intraday lows, which was 316. Yesterday's intraday low was 320. The low from 10-11 was 315. The low from August 20th was 313 essentially. You can sort of see how that 313 area is a big deal. We get below 313, that's where I said you go down to these swing lows for your next targets. NVDA, it gapped lower today, down $10, but again, it's still a $200 stock. Finished lower by 4.39%, just put in a doji. That is not a hammer, it's nothing of the sort. Key support still resides around that 213-ish, 214 area. Below that, then you start coming down to a gap fill at 200. So heads up on NVDA. And here's a stock that's been down 20 out of 23 days. The XHB, it's an ETF. It's not even an individual stock. If I zoom in here, from here to here, it's only had 3 up days. Now, what happened today? Bullish engulfing, big spike in volume. That is noteworthy. If this can get back above the 5-day on a closing basis, I could consider a stop below the low of today. So if we get up above the 5-day tomorrow and close there, the stop could be below today's low. The target, 20, 50, and then back up towards the $40 price target. So the 20-day EMA in red, 50-day SMA in orange, and then back up to 40. It's not often you see an ETF down 20 out of 23 days, but it certainly has gotten a pretty big haircut here recently. A lot of negative news out there. So that's it, folks. Wish you a fantastic rest of the day, and I'll be back here tomorrow, which we should have some fireworks in aftermarket trading. So take good care.